Awesome. So now we're going to get into this evening's topic, which is always a popular topic, but nobody likes them.
It's
So,
my favorite.
and that's why you are here. So, celebrating her 11th year in business this year, let's welcome tonight's special guest, owner of AR Tax Prep, Adella Rose.
Thank you so much. I'm so excited to be here. I want to start by letting you guys know that taxes are not as scary as everyone thinks they are. It's really just a matter of finding the right person that you connect with and somebody that can explain things to you in a way that you can understand. So I'm here now, so we're all good. So I'm going to start by quickly introducing myself. My name is Adella Rose, like Lynn said. I'm the owner of AR Tax Prep. I started my agency in 2013, but I only actually went full time in 2022. I was a full-time accountant at Brown's Shoes. I'm sure you guys know that popular shoe store. So I was there for about 5 years. And during coronavirus, I was so scared that I was going to lose my job. And I had always done taxes on the side and my business. It was progressing, but it wasn't at like an amazing space. But I was so scared I was going to lose my job. So I went full head in, full time in 2022. And since then, I now serve between 2,500 to 3,000 clients a year for taxes. I have one full-time assistant, thank you, and I'm virtual based. I work entirely from my beautiful space, and I do have an office space downstairs where I can meet my clients, so I'm forever grateful for that. And yeah, I'm just so happy to be here and to share my knowledge with you guys. Like Lynn said, I am going into my 11th year, so I have so much knowledge to share with you guys. So today we're going to be covering a few things. I only have 20 minutes and I am a chatterbox. So I'm going to try to get through this as fast and get you guys as much information as possible. And there's going to be a Q&A at the end, just like she had mentioned. So you guys are more than welcome to ask some questions. So we're going to get straight into it and we're going to talk about tax credits versus deductions. I know a lot of people get these two confused. So just to get right into it, deductions are used to reduce your income before any credits are applied. So we're going to just start there. So then there's like non-refundable tax credits and refundable tax credits. So we're going to get quickly into that. So tax deductions are amounts you subtract from your total income, and then by making that you reduce your taxable income. So a deduction would be more like a self-employed business expense rather than a credit. And then you have tax credits and these are the amounts that you reduce your tax that you pay on your taxable income. Some of these are refundable and some of these are not. So I know I'm using quite a few terms that a few of you may not understand, but please reach out to me after this. Because we're a virtual service, I give all these answers for free by email. So you guys can literally ask me all the questions. So I'm just going to try to zoom right through it. So like I said, we have the non-refundable tax credits and then the refundable. So a non-refundable, you can use these to reduce your tax payable. So if you have a balance due, you can use it to reduce it to zero, but it won't ever become a refund. So a good example, like a non-refundable, is like a charitable donation. So charitable donations, you'll never get this money back. Even if you give them $1,000, $2,000, it'll only reduce your taxable balance. So if you're someone who has like one T4 and doesn't generally pay at the end of the year, charitable donations might not be in your benefit, because if you don't owe at the end of the year, it's not going to increase your refund in any way. Charitable donations would benefit somebody who is making a lot of money and has a lot of money owed at the end of the year. Then we have the refundable. So that's what we like. We like the one that gives us money back. So when the total of the amount is more than the tax due, you get it back. So a good example of the refundable tax credit is like the GST credit. So this is a general credit that's given to families with children. So this is an automatically applied credit, and regardless of your financial situation, this credit is always applied against if you have whether you have a balance due or not. Um, we have let me just so a good example of a refundable would be sorry, here my notes are a little bit off. I apologize. Give me 1 second. So yes, then we have like the Canada's Workers Benefit, then we have the RRSP deduction, then we have home buyers amount, we have a bunch of different, like even moving expenses. So these are other examples of like non-refundable tax credit. So then we get into I apologize, my notes are just a tad a bit off here. Non-refundable. Of course. Okay. Now we're back on track. I'm sorry. Of course, when I'm oh no, my internet. Can you guys still see me? Am I still here?
We see you. Yeah.
Oh, okay. Sorry about that. Sorry about that. So let's get back into refundable. So like I said, we have some self-employment expenses, we have the Canada's Workers Benefit. Generally, since we're more like a self-employed team here, I'm going to get more into some deductions that we would take like if we're a self-employed individual. So we have like advertising and vehicle expenses, bank fees, office supplies, inventory. So these would be more of like deductions that somebody would take if they're a self-employed individual. Then we have like employment expenses. So if you are employed, you also have employment expenses that you're eligible to deduct if your employer provides you a T2202. So when you're provided this document, you're more than welcome to take this as a credit on your income taxes. Then you have the RRSP deductions. So I'm going to get into a little bit of this, but of course we all know that the RRSP specialist here is Lynn. But just to get into a little bit of RRSPs too, it's a tax deductible. It's tax deductible, and contributions made to your RRSP reduce your taxable income dollar for dollar. So that means if you contribute $1,000 to your RRSP and claim that as a tax deduction or for that contribution, your taxable income will be reduced by $1,000. So how this can affect, so your contributions in any given year, they don't have to be claimed in the same year, but when you do contribute, that entire amount can be reduced on your taxable income for that year. So getting back into some oh my goodness, I'm so sorry, my computer, because I have my Zoom over here and then I have my notes on the other side. Do you guys mind if I just keep my notes on this side so that I don't block my
But
Zoom? I apologize.
that's fine.
Okay. Um, I'm so sorry, guys. Thank you for your patience. we're back onto the deductions. So before any credits get applied to your tax return, like I had mentioned before, they first calculate your net income, and then they calculate your taxable income. And these are important for two different reasons. So the net income, it's used to determine the eligibility for some government benefits, such as like a good example is the Child Canada benefit, the GST, HST rebate, like I had mentioned, the dental benefit. It also determines your eligibility for credits, your dependent amount, your caregiver amount, your medical expenses, and then your taxable income. It determines the rate and how much tax you pay. So basically, in other words, how much income you're being taxed on and how much income you're being taxed on is basically how high the rate will be. So the higher your taxable income, the higher your tax rate and your tax bracket and tax payable. So your deductions basically lower these amounts. So childcare expenses, RSP, employment expenses, they will lower these amounts, which is what we want. So a good example is, just a quick example that I've used in the past. Say, for example, you have an individual that makes $65,000 a year. Okay, so they have employment income and bank account interest. So just standard. He contributed to his RRSP and he has some childcare expenses. So his total income is going to be $65,000 minus the RRSP contributions and the childcare expenses, and the net income minus from the previous year. His taxable income is basically going to be used for the credit. So then we're going to get back into the non-refundable credits like tuition, disability, caregiver, the first-time home buyer's amount. Now, these are non-refundable, although they will reduce your tax due. They are non-refundable. And I mean, I'm trying to give it as quickly as possible. That's pretty much an overview, if long story short. We can also get into, I wanted to get into a little bit of the first home savings account as well. Since that's something that has been newly introduced, and it is something that you're going to want to have a little bit of interest in. So basically, the first home savings account, it was introduced so you can minimize your taxes. And at one point, we had something similar with the RRSP where you could, the first time home buyers, you could borrow from your RRSP to put this onto your first home. But instead of having to pay this back and having your accountant have to keep track of what you have to pay back annually, you can actually just start saving for it and contributing directly to this. And this is tax deductible completely. It takes it, whatever you contribute comes off of your income right away. So so there's that too. If anybody wants more information on the first home savings account, please do reach out to Lynn. She's also an expert on that as well. Just to get into a little bit of some more tax deductions, because I know I have a list here. I'm going to get into them more. And then if anybody like relates to them, they can always ask questions, reach out to me, and we can speak more about them. So so it really depends on like your category or your tax situation. So everybody's different. Some people are disabled, some people are caregivers, some people have pensions, some people are employed, self-employed, they were on CNESST. So it's really about finding an accountant that can find the deduction or credit that works for you. So there's different kinds of like for example, family, you have like the child care, you have the support payment, the spouse and common law partner amount, the Canada caregiver amount. You have all these different adoption expenses, so many things when it comes to family medical expenses. there's so many. You have, if you're a student, if you're in school, you have interest paid on the student loans. You have the tuition, education, and textbooks amounts. You're going to have to provide a T212 no, T2200 for that. I apologize. I have so many forms I have to remember. T2200 for that. And you can provide that if your child is in school or if you go to school. Then there's the Canada training credit. So at the back of your notice of assessment, at the end of every year, there's a Canada training limit that the government provides to just being Canadian and being educated and going. So this limit increases annually if you don't use it, and then it expires at 65 or death, if I'm correct. It may be extended a little bit longer, but generally it's 65, and you can actually use this training credit. On average, it's $250, but so far this year, I've seen a few people with $450, but generally it's $250 every year. So there's also disability, unfortunately. You have the disability supports deduction, you have the disability tax credit. So you see you have a deduction there, and then you have a tax credit. So you need to be able to see which one, if you qualify for both, if maybe you only qualify for one. There's the Canada caregiver amount, like I had mentioned, but there's also for people who are dependent on you if they're over 18, things like this. Just simple things like that. I'm going to get into being self-employed. I really want to cover this because being self-employed is my favorite. I am recently self-employed. It's been 2 years, and my tax bill, even though I am the tax lady, is just as high as everyone else's. So obviously I had to find the best way to manage myself, and I wanted to give you guys some tips on that. If you're starting a business, if you're a freelancer, if you're just making some general income. Number one, okay, I don't want to skip from, my mind is like running. Like I said, I am a chatterbox and I only have a little bit of time to get all this information out. So just to quickly go back to the deductions, this carries over to being self-employed. We're going to get into expenses and stuff like that. So this is really more into deductions. So when you're self-employed, the first thing that I would tell any self-employed individual before anything, they say, oh my goodness, I woke up, I wanted to start a business today. What's the first thing I should do? It would be get a business bank account. Get a business bank account. Get a business bank account. That's it. That's all. Because worst case scenario, if you're the worst bookkeeper in the world and you don't manage anything, at least I have all of your transactions. Your income is in one column. Your expenses are in another column. Or on the business credit card, and I'm able to see, I'm able to know what I need to get, and you're able to know what you need to get. So that would be your first thing. Your second thing is find an accountant. Find an accountant, somebody that you bond with. There are people who you're not going to work well with. You're going to want to make sure you find somebody that works well with you. Some people, like for example, I have a virtual business. It doesn't work well for the older crowd. The older, when I say older, I mean like 85 years old, been going to the same guy every year. It doesn't work for them. They want somebody a little bit more in their field, and that's okay. That's okay. Find somebody that works for you. Then you're going to get into bookkeeping. Bookkeeping would be your third most important. I know I did say your bank account, but your bank account is basically the reference. And then from there, you're going to want to make sure you manage your bookkeeping well, whether this is a simple spreadsheet or an actual bookkeeping like QuickBooks or Sage 50, like a bookkeeping application. You can generally start with Excel. Usually with my clients that know nothing, absolutely nothing, I will never send them straight to QuickBooks. I will make sure you know exactly what you're doing before you go into a quick way of managing, because I think it's really important that as a business owner or as an entrepreneur, as a freelancer, that you know exactly what you're doing before you move into the quick parts of things. So keeping track of your expenses, because your expenses are going to be your deductions. These are things your advertising, your meals, your travel, all these things can be categorized. So this is really important that you note that you have these on file and you keep them in order so that you can provide these to your accountant, or if you take care of things yourself, that you at least have your bookkeeping up to date. Because at the end of the year, at tax season, generally accountants are not going to do your bookkeeping. Your bookkeeping, a lot of people need to separate that. Your bookkeeping and your accounting are two separate things. So your bookkeeping needs to be up to date, organized, clean, and then your accountant can prepare your year end stuff. I have no idea how much time I have left here. Let me just check to see how much I can chatter. Is there a way for me to know? Lynn, do I still have time?
I missed it. I went to the washroom. Sorry.
Do I still
You
have time?
asking? What were you asking?
No, I was saying, do I still have some time left?
Yeah, a few more minutes so that we could get
Okay,
into the
perfect.
questions.
Yeah, perfect. So, yeah, just keeping track of these, like, keeping track of your expenses, because these are big deductions. A little secret here, a lot of people don't realize that if they do any kind of administrative work or any kind of anything from home, that the home office deduction is accessible to them if they do not like rent an office or work at a physical location. You have this expense to you. So things like your rent. Unfortunately, mortgage is not, you can't write off a mortgage, but you can write off mortgage interest. You can write off, here, let me just get up my little list here and I'll say it all to you exactly. So yeah, so we have a good examples of deductions for self-employed purchases, just anything you are purchasing to make the business run. So things like supplies, subcontractors, people you have paid to work, advertising, promotions, meals and entertainment. Although this is 50% deductible, it's still deductible. Things like debt, insurance, bank charges and interest, taxes, licenses, memberships, office expenses, office supplies, professional fees. My list, I'm telling you, I don't come to play. Administrative fees, repairs and maintenance, salaries, moving expenses. Then you have your work from home. You have heat, you can electricity, home insurance, municipal taxes, school taxes, mortgage interest, rent, internet, telephone, snow removal, any condo fees. If you're driving your car for your business, your kilometers that you're using for the year, as long as you're keeping a vehicle logbook, as long as you're keeping track of these, let me tell you something. I got a little something to tell you. These are deductible. You know what I'm saying? So these are things that when you reach out to somebody, an expert in this industry, or you do your research, you can find this information and you can definitely, it's profitable for you, especially if you're working from home and you're putting long hours. Trust me, I know I'm in this corner a lot of hours a day. I'm writing it off. So that's it for me, really. I tried my best to squeeze it in. I apologize for the technical difficulties that I had. If anybody does have any questions, please reach out to me, and I'll give you a quick, just before I let you guys go, a quick overview of the way that my services work. So a lot of times accountants, they charge hourly. I do not do that. I work on a service-based I work in a service-based way. So if you pay me to file your taxes, that also comes with free consultations, communications, follow-up, any kind of email communication. I do believe that charging by the hour puts a barrier, and my clients are unable to communicate exactly what's going on. So with that being said, I do hope that if anybody feels anything and they want to reach out to me or they feel like they have questions, please do, because we work on an educative basis. And my priority is not, although I need to eat and I need to pay my bills, it's not to drain your pockets. It's to educate first and to give that knowledge and to share that with the community.